All right, doing a quick video for simple traders and a reminder that trading is risky. Please see our website for our disclosures and use discretionary funds that you can afford to lose if you are trading. Don't forget, we've got that webinar coming up November 8th with Ninja Trader. Really excited for that opportunity to help share with some people things that we're doing. And don't forget to go to the blog if you want to see the videos that I've been putting together as part of this course. And I try to sanitize them a little bit so the general public can see it as well. Okay, we're taking a look at a bigger chart. And for those traders in the room, I've already showed you what this is referencing. And as we hold each successive leg, we can identify next targets based on ratios and expectations. So the top of this box is that 29 and change, that 30 target. And along the way, we have kept our eye on the prize. We have not looked backwards and said, I think we can fall here. We have looked to buy support and then hopefully get closer and closer to that big target. And that target was identified months ago. Months ago, we identified that, and the question at the time was asked, how much of a drawdown will we need to suffer to get that target? And we had to go a long way back before we found footing and then started to drive back in this direction. But we've been very clear. While and this is not to make fun of other traders, and it's not to be arrogant. We're very humble here, very blessed to have found a system that has some ideas that work. But the Chicken Littles have kept saying all along that, you know, we're ready to crash, we're ready to crash. And we've taken the opposite approach. That may be, but let's take it one day at a time, and let's look to buy support and take one day at a time, trying to seek where the market would like to go. Line of least resistance has been up. So one day the stop clock trade will work, and gleefully all the bears will be saying, I told you so. But until then, we want to print money. And we want to do that by just following the line of least resistance and taking the trades that make sense. As a day trader, much harder, of course, when you go to sleep and you wake up and the market is running. And that's the big adjustment in our system in the last few years, is understanding the convenient trade isn't necessarily when you wake up. Just, you know, if you've gone from long to high, from low to high, you just short. Now you have to say, where are we going? And you have to interpret that. And the convenient trade when you get at your desk may be to just buy high and sell higher. And that we have had to make that adjustment because of bots. That's one of the biggest changes in our system. So will we hit this 29, 30? Yeah, probably. The question is, what kind of a drawdown will we have to suffer to get there? And that's where risk and reward comes in, because we're just a stone's throw away from that already. And here's a look at another chart. We had suggested, first of all, 82.75 we called as support, correct? And we referenced the prior 78.5 low. That is big support in the drive to try to get higher. And in this swing, we talked about this 95 support. Remember, there's still a little gap here, about a point. We talked about this as support. We had that big drive. Yesterday, we had the consolidation day. We pulled back yesterday. What did we call for support? We said this 05, 06 area is going to be our support. We got the drive, and then that quiet day. And at the end of the day, I pointed out, do not short a dull market. That's the old adage. And we said, okay, let's just use this 9 and 10, make sure you're paid, and that will be our support. Aggressive support till broken. Then overnight, we get the quiet move, and then this thing starts to take off this morning. So the dynamics that we have talked about are well underway. And now the problem is, do you close your eyes and buy and hope for 2 more points? Do you go sidelines? That's the hard part of trading. Trading is simple in terms of the numbers, but in terms of executing and risk and reward ideas, that's where it starts to get challenging. Third time through trade, back here. You can see it, right? That prior high. Remember that prior high at 17, 17 and a half? Started with the old contract at the 12s. And then 17s, and then obviously the next targets, which we put down overnight, possible targets. So here we are. And that's the hard part in trading, is saying, okay, when is enough? When do I take my chips off the table and say, I've got something and I'm going to wait, and maybe if it pulls back, I'll try one more time buying. So you have to be comfortable leaving some chips on the table. And a chart like this cannot say it any better than where our supports were, where our support was here overnight, holds onto this 15 zone, and that takes off. And the acceleration comes this morning, driving towards those targets. So for today, it's probably a good day for me to have an appointment, not be around, stay out of trouble. For traders who miss this move, all you can do is learn from it. There are going to be tons of opportunities going forward. But we have called this, months ago for the 2930 target, with the question of how much drawdown till we get there. But then this becomes a magnet, and you've got to feel that as we start to move in that direction, that this is a magnet for us. Hope this helps your understanding of what we've been talking about, and I'm glad it's happened so quickly for traders in this room to be able to learn and see just how that dynamic has played out. This bull flag, boom. All right, this is E signing off for eminywizard.com and marketwizards.com.